quickly, for those of you who don't know Lucas, he spoke at our climate conference in March in Mountain View, at which time he was still the head of, what was your title exactly?
Chief Environmental Officer.
Chief Environmental Officer at Microsoft. And if you have followed climate and business, you know that Microsoft has been on the global stage by far the most advanced and aggressive big company to move toward meaningful climate adaptation with a net zero target for its entire history, so that they're in the process now of taking steps to essentially absorb the equivalent of all the carbon they've ever emitted as a company from their founding in 1975. They've made huge investments in carbon capture, which Lucas oversaw. Maybe you should, before we get to Haveli, talk a little bit about how Microsoft did make that transition and why it was considered a priority at Microsoft.
Yeah, sure. I mean, I think we'll talk about what I'm doing at Haveli and why I left Microsoft. But if we rewind the tape, I kind of, work on my career. I'm a bit of a narcissist, which is good because I'm a human, and we seem to have built the most kind of narcissistic economy. We were just talking about you and Andrew were just talking about, and so I think about, what am I trying to prove? And when I went to Microsoft,
as a human.
Yeah, as a human, like, what point am I trying to prove in what I do every day? And that's kind of how I think about my day and my year and my career, is what points am I trying to prove? And when I went to Microsoft, the point I was trying to prove is that a company can do this. And by this, I mean it can transform its operations towards one that resembles a company that will need to exist in 2050, a net zero company, and one that takes holistically environmental sustainability seriously. The second thing that I was trying to prove is that it wasn't just about the operations of a company, but it was also about the revenue generation of a company. And that when I say we can do this, it means that we can put sustainability at the core of how a company operates and what a company makes, and that we can do that profitably and we can do that sustainably over time. I'm not going to spend the whole time talking about Microsoft. We launched 4 key initiatives to be a carbon negative, water positive, zero waste company, protect more land than we use, and build a new computing platform called Planetary Computer. Microsoft really set the stage and is continuing to provide that leadership even in my absence on how to do all those things that I just said. We launched a $1 billion climate fund. I always said that fund that I oversaw was the easiest fundraising I ever did for climate, because I launched $1 billion, and 2 weeks later or something like that, Amazon launched $2 billion, and then Google did something else too. And so, next thing you know, there's $5 billion, and all I had to do was stand on stage for 30 seconds. And so,
that's influence.
Yeah, we became the largest purchaser of carbon removal in the history of the world. We built one of the first carbon accounting, enterprise-level carbon accounting systems of record, the Microsoft Cloud for Sustainability. And when I left, it was sustainability was at the top of Microsoft has basically one slide that describes everything about the company. Sustainability was at the top in our brand promises. You mean it's their
top priority?
Well, no, it's at the top as one of the brand promises. It's in the
brand promise,
It's in the middle as one
Profit is still the top priority.
Yeah, but profit's in the middle. I mean, the brand promises are what you say you stand for. Sustainability is one of those things. In the middle of that slide is how you make money, your products and your revenue streams. Sustainability's in there. And at the bottom are your values and how you operate, and sustainability's in there.
Yeah.
And so I felt like I had proven that first thing, which is, can a company do this? And I chose Microsoft for 2 reasons. Well, principally because if Microsoft can't do it, then we're all in trouble.
Because they're so rich.
They're so rich.
Yeah.
And you were talking about Facebook, most profitable, et cetera, et cetera. The internet economies, and Microsoft in particular, I mean, maybe Facebook still is ahead just from a lower data center footprint. But no one's achieved, if you look at revenue per head, if you look at metrics like that, no one's ever seen a company like a Microsoft, particularly, or Facebook, et cetera.
Right.
They're just historically way out on the edge here. But then if you say, there's a few. If you say, carbon intensity, grams of carbon per dollar. That's where the internet companies just are even further out there as outliers. And so
Because of the data centers? No.
no, I'm saying that's how they're
On the positive side.
Yeah, on the positive.
They have very low carbon
That's right.
footprint in reality
To
as
profit.
company compared to, any kind of industrial company
Right.
or automaker
Right.
or whatever.
Right. So choose a company that has the resources to do it, and choose a company where it's doable, right?
Right.
And that's what we did at Microsoft, and that's what Microsoft's going to do over the next 8 years to 2030, and then continue to do over 2040, 2050. So I have no question in my mind that Microsoft is well on its way to achieving those commitments that we put in place. If I did have a question in my mind, I never would have left. But the last question that you asked me the last time we were on stage together was, do you think this can be profitable? Is there a sustainability software, wave coming? And I said, of course, absolutely. And that, if you're an investor and you're 20 years out from now and you look back and you weren't investing in this space, you missed it.
Yeah. So that's what
that's
you're
what I'm
doing
doing
now.
now.
That's what you're doing. So you went to an investing firm to show that investing in climate is a profitable thing.
Yeah, I mean, what I'm trying to prove now is that Microsoft wasn't a fluke.
Yeah.
That companies of all shapes and sizes can do what Microsoft is doing. You can't just, it's not just from 0 to 60 though. It's not just any company. I'm still a software guy. I believe that we live in a software world, and that's only going to continue to advance. And so I know sustainability and I know software. So I went to a new private equity company that is investing in software with sustainability as a core investment thesis and a core operating thesis. And so I think that if we can prove that, taking this risk on and baking it into your risk fundamentals of how you operate a company, and recognizing the opportunity and baking that into your revenue generation capacity, then we will have done a significant service for the broader economy. You and Andrew are talking about capitalism, this and that, whatever, I don't know. I'm just going to try to work within the system that we have and show that in the system that we have, which is a big, loose, poorly defined thing, that this is possible. We've shown that it's possible at one of the biggest, most successful companies in the history of the world. Now I want to show that it's possible for a whole host of companies.
Okay, and I do want to hear questions and comments from the audience, but a private equity firm typically buys operating companies and adds efficiencies, makes them more valuable, and then sells them later. Yeah. Are you going to buy companies that already are climate responsible, or are you going to buy companies that you think could be more profitable and more valuable if climate responsibility was more baked in than it is when you buy them?
I would say, I think your question was companies that are already on the path or companies that you want to...
Are you going to put on the path?
Yeah, that you can put on the path.
Or both?
So I would say first and foremost, it's both. By focusing on the software sector, you are a priori choosing to work in a world where getting to net zero operations for a company is inherently easier than, say, taking a Midwestern fracking company private, for instance. So I would say that our ambition is to operate every company in our portfolio as a net zero company. Because we're a new company, I think that we have an opportunity and an ambition to do something that very few companies have, which is to be a net zero portfolio from fund one. And obviously, as you're raising your first fund, that means that you don't have all these historical legacy investments to deal with, but we also can say that we've put that in there. Then the second bit, and so whether that's an enterprise payments system company that has nothing to do with sustainability or not, our ambition is to make sure that that company's operations align with a net zero outcome. Then there are strategic investments in sustainability software solutions, what I call sustainability systems of record, where those companies are predicated on building and selling into the market solutions for a net zero economy.
Have there been a lot of PE firms that focus only on software? Is that a big thing? Has that been a long-standing industry, or is this sort of new almost in itself?
It's not new in and of itself. I think the founder of Haveli Investments co-founded a company called Vista Equities, which is one of the more successful private equity companies in the world. They were one of the early private equity companies that kind of built the software PE space, but there's
So there's been a few, yeah.
There's been
I should know the answer. But the thing that's interesting, even in light of our previous conversation about Facebook and some of these other companies, people often have asked me in recent years, how could Facebook be fixed? And my answer, which many people say is impossible, is they could take it private. Because under the spotlight of Wall Street, he will never spend the money necessary to remediate the disinformation. It's too expensive. So the same model applies with climate, because you can buy companies that haven't been able to spend the money on climate action, because once they're private, nobody cares but you what they spend money on until they come out and you market them to public buyers again as a new IPO or whatever. So it makes a lot of sense. It actually could be something that could be really promising for a lot of companies if there were other PE firms that not only in software, but many companies are going to need to spend so much to be climate responsible that it's going to be super hard as public companies. Do you agree with that?
100%. I think that the reason that I ended up in private equity is I was looking for an opportunity for, okay, how do I prove that Microsoft wasn't a fluke? Well, you've basically has two options. You can try to prove that serially, like get a job, do a job, quit a job, get a job, do a job, quit a job, go be the chief sustainability officer at another company, do it there, blah, blah, blah. That's a bit like personally disruptive, and it doesn't scale. Or you can try to figure out how to do it in parallel. Mm-hmm. And if you want to operate against companies in parallel, you really have only a few options. One's consultants, right? But and the other is investments. And there's different types of consultants and there's different types of investments. But after my career in sustainability, I would say that there are a few things that make sustainability transformations different and difficult. They're oftentimes both governance and a culture transformation that needs to happen. It needs to happen over a long time period. It needs to happen over the operations of a company as well as the revenue generating aspects of a company. And so consultants, you're not around long enough. You're not, you're not managing this company. Investors, I mean, no offense to those of you who do this, but like, no one cares what a minority VC says that much. Once you're a mid-market company and above, it's like, hey, you got like 0.1% of these shares. Like, Google might listen to TCI or whoever they are.
Because they have $6 billion.
Because they have $6 billion, but in the grand Google scheme of things,
very much
$6 billion is like pocket change.
That's not even 1%. Actually.
Yeah. So really, I looked at it and I said, well, private equity, buyouts, like, you have the opportunity to govern this company, to help run this company, to help put things through like board placements, executive compensation, and the like.
Well, it's not only going to be expensive for the reasons you said, but in probably quite a few cases, if companies really want to make a net zero transition, they're going to have to get out of some businesses.
Yeah.
There's some businesses that you're just not going to be able to maintain. And that's really expensive.
Yeah, and this is, I think, there's a double-edged sword angle to your point about private equity being and the privatization of companies being an opportunity to kind of transform away from the pressures of the public market. And actually, you see the other side of that sword edge in the media, mainly when you hear about climate and private equity, because the way public companies are finding it most efficient to lower their carbon balance sheet is to sell off some of their high emitting businesses. And who's buying those but the private equity industry? And so the privatization of high emissions industries, so taking them out of the public eye, and there's a lot of...
And then continuing to pollute.
And then continuing to pollute.
Yeah.
And so that's a problem. It's also, using the same mechanism that I think is a solution by taking some of these companies and transforming them. So one of the things that I was consistently confused by while I was at Microsoft, and now I understand since I've left, is I would say if you wanted one fundamental principle that drove everything that we did at Microsoft, it was transparency, which is like blah, 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 corporate speak, transparency, sure. But like, man, you want to read some white papers? Does Microsoft have white papers? You want to read, all of our carbon accounting books? Go have fun. Like everything was super transparent. And everybody, the number one complimentary comment that I would get while at Microsoft was in praise of our transparency. And I never understood it because I was just like, transparency is not like radical.
Like, why hide it?
Yeah, like why wouldn't I tell you what I'm doing? You're the one that told me to do this. Like now I'm doing it. Shouldn't I want to tell you what I'm doing? And then I left and I went into the world of private equity. And the first thing you do is you're like, well, I got to go and kind of benchmark my ambition against what everybody else is doing. Because even if I think, wow, this is amazing, I don't want to come out there and everyone be like, yeah, welcome to 1984. And you find out very quickly, like, that the first word of private equity is private. There is not a lot of information on what's going on out there. Best I can tell, none of the top 10 private equity companies publish at the portfolio company level actual emissions numbers. One or two may publish aggregated emissions intensity numbers, et cetera, et cetera.
That's interesting.
So I think just bringing some of that, like what
But you're going to.
Well, that's the ambition, yeah. I mean, just bringing some of that playbook, some of the Microsoft playbook isn't going, you can't run those plays at a mid-market company, right? Maybe you're not going to launch $1 billion climate innovation fund on, but a lot of the plays you can. And things like transparency, I think are critical when it comes to our carbon books, critical when it comes to people trusting any market, particularly a private market.
Well, we need transparency in business and in capitalism much more. Otherwise, we can't price externalities, which is sort of what we think we're trying to do with systems thinking, right?
Yeah.
But we've only got a little time left. If anybody has a question for Lucas, I'd love to entertain that now. Anybody have a crying need to ask a question or say something? It can even be, please. Okay, let's get the mic up here. Thank you, Caitlin, who's now the mic runner, even though she's the program director. Okay.
Hi, my name is Mara. I'm a director of customer success for an enterprise software company. So my question is, you clearly built a strong business case for the initial investment in sustainability, but now in this economic climate, a number of businesses are looking to cut costs with either layoffs or reducing their spend on software. If you were to advise people who are having conversations with these enterprise software, especially the C-suite, as to how they are fitting in to help the organization address their sustainability goals, what would you suggest?
Well, I think one of the most powerful things that any company can do, particularly on the finance side and from the planning side, is at the very least institute a shadow price on carbon, and even better, institute a real price on carbon. So at Microsoft, we had a real price on carbon. We charged every business group for their carbon emissions. We actually took that money from them. But at the very least, looking and saying what you think, because what you think the real price on carbon is going to be across the European Union, for instance, et cetera, is making sure that the investments that you make today make sense 5 or 6 years from now. And that is what I would just say, climate is making, in some ways, it's making business very difficult to plan for because of the massive heterogeneity of policies, et cetera, that are happening around the world. But it's also making it pretty easy because the physics and the chemistry of our global climate system are relatively well understood. Our economy is built off of those fundamental laws of nature, and we know what that trajectory is doing. And so in some respects, it's hard to say down in the minutia, ooh, should we do this? What's the EU going to do? What's the US going to do? What's Canada, blah, blah, blah. But how, and over what time period is that going to play out? But if you're like a decadal planning process in a business, there's no question that you should be planning for a net zero, at least net zero operations of your business. Any company that's not doing that is gonna get smacked so hard between 2030 and 2035.
So it's really, it's existential for companies to do it. Otherwise, they will be hurt financially and in public perception in a lot of other ways.
Yeah, I mean, it's like, I mean, we're kind of seeing this play out on a global stage where it's like, man, people cost money, right? Like, I got to lay some people off. And you're like, yeah, but also like products are built by people. So you got to, I mean, you know, if it's like, hey, macroeconomy is like tough right now, I guess I should just fire everybody. Like, you can't do that. You have to invest in people and products or you're not in a business. That's the way climate is right now. You can't just be like, oh man, macroeconomy's rough. Guess I just won't pay attention to the fact that my business won't be around in 10 years, or that we'll be under some like catastrophically like ruinous regulatory regime. And so, anyway.
Okay, we've got to finish this, but we're going to have a brief town hall after this. I hope you'll be part of that. I want to just say one thing. This is the first time Lucas has spoken publicly since taking this new job. And I think it seems to me you could become a very powerful spokesperson in business. I hope you will be out there talking more freely about it, because PE people generally don't come out of their private little secretive hole.
Yep.
But you really have a vision that is so important, and I'm so happy to see you doing it. And thank you for coming here and opening the veil a little bit for us.
Pleasure.
Thank you.
Thank you. Thank you.
Really good.
Thanks, sir.
Thanks.